Now, let's say you want to take this trade. This is how you take this trade. First thing you do is, we're on the monthly time frame. You mark that fair value gap or the inefficiency or imbalance. You mark it out. Once you mark it out, what time frame would you like to see a break of structure to the upside for you to start looking for a buy? Remember our last session, what I
Yeah.
said.
Yeah. Okay, so basically we'll be looking at the 30 minutes time frame.
Remember, when the monthly, you count three time frames to the left.
Oh, 4 hours.
Yes, 4 hour. So I've not sent you videos on that, but I'll send you videos so it's much easier for you to remember. But don't worry for this first time you missed it. Nobody got it the first time after one session. Most people, it takes them some time. So right here, you can see you can see that monthly now, monthly is bullish,
Yeah.
consistently creating new highs, all-time high, new highs. We're bullish. So what we're looking for is how the smaller time frame will now continue bullish. And if you go into that 4 hour time frame, can you see that on the 4 hour time frame, this right here was bearish, creating lower highs and lower lows,
Yeah.
creating lower highs and lower lows. And then right here, we took liquidity from all these highs, and then we still came back down to create a lower low,
Yeah.
to create a lower high and a lower low.
Yeah.
So the 4 hour is bearish. So all we're looking for is for this 4 hour to now switch to bullish after tapping our monthly fair value gap or our monthly point of interest, which is an imbalance, an inefficiency. So we just want the market structure on the smaller time frame to switch to bullish, which is the bigger time frame market
Yeah.
structure. And the moment it switches to bullish, right here, this is right here, we switch to bullish. We
Yeah.
broke structure right here. The
Yeah.
moment we break this structure, what you're looking for is fair value gaps that price will retest into and then rally.
Okay.
Now, now this is one way you can do it. You can literally use this fair value gap here. There's a fair value gap here. There's a fair value gap here. And there's a fair value gap here as well.
Yeah.
Now, you can do it this way. You can just use this fair value gap, the first one right here. You can just use that one and use your stop loss to be right here and target. You can target the previous all-time high. Now, let's say you put in $100 on this trade. You would have made $200
Yeah.
clean. This is literally the low risk way to do it. Low risk. Why do I say this is low risk? The reason is because you're using a 4 hour high and low and fair value gap. This is a low risk way. Now, the reward is not really ambiguous. The reward is just,
1:2.
yeah, 1:2. Two times whatever you risked. That's the reward. You target the previous all-time high. You can see how price literally went straight in there. Now, another way you can still do this, or this can be your first entry. Another way you can still do it after this is your first entry is after price taps this first fair value gap right here. This is a 4 hour fair value gap. What time frame break of structure would you like to see?
That will now be 15 minutes.
Exactly 15 minutes. So the moment price taps that fair value gap right there, here,
Yeah.
you can say, okay, I'm looking for a 15 minutes break of structure. And right here, what you do is you use this high right here and you look for when price broke that structure. And as you can see right here, we broke that structure.
Yeah.
And after we broke that structure,
Why did we use that high now? Is that the
now,
high
now,
after it hits the
so let
7?
me let me show you why we hit the high. This was the high, and we'll have this low. that hit into that fair value gap.
Yeah.
This was the high that
Yeah,
created
before the low
the
that
low
hits.
that
Okay.
hits that fair value gap on
Okay.
the 4 hour.
Yeah. Okay. I get it now.
You can see it now.
Yeah.
You can see that small high here and low.
Yeah.
It created this high created the low that tapped into that fair value gap on 4 hour. So all we want to see is for price to break that high that created that low. The moment it breaks that high, we can literally just use the high as an entry, or you can still start looking for another fair value gap you can use. An example of another fair value gap you can use is this one here.
Yeah. Seen it already.
You can see the fair value gap, and you can see how price still came down into that fair value gap.
Yeah.
You can literally just use the fair value gap as an entry, use this low as stop loss. Now, one thing I'm just going to tell you this earlier now. Even if your stop loss is here, always remember to add at least 1 or 2, 3 pips.
Tips. Yeah.
Just give it an extra little room due to slippage.
Yeah.
Sometimes price can come down very close to this low, but it won't take the low. It will come down very close and then reverse. If your stop loss is directly below here, that trade
Good.
will take you out.
I'll take you out.
Even if it didn't hit your stop loss, it will take you out. Your broker will literally wipe you out because they basically don't want you to leave that trade with profit. So if there's any way they can manipulate it, they will manipulate you out to make sure you are out and don't make any money. Now you can see that this second opportunity now, it's a higher risk but higher reward. If you risked $100 on this one, you would have made literally $840. This is a 1:8, 8.42. $100 risk on this will make you $840 on this second entry.
Yeah.
Does, does that make sense?
Yeah, it makes sense.
So you can have both entries. You can have 2 entries on your trades. Like me, I usually have 2 entries. I have this first entry and I have this second entry.
You take both.
Yes, that's how I trade. I use 2 entries on my trades. I don't use just one. I use 2 entries. Either I'm using it one on the higher time frame, 4 hour or 1 hour or 15 minutes, and then one on 3 minutes or 2 minutes. So, but I'll teach you how to do all those things and play around with the smaller time frame. But you have to be aware that the lower the time frame, the higher the risk.